This week looked messy on the higher time frame. Price sat within a boardroom and the usual levels just wouldn't behave. But on the lower time frames, the model was crystal clear. A double-sided stop hunt on Monday, a session behaviour flip, a 3-day climb, and then a Brinks trap straight into FOMC. While the headlines were screaming, Annii and Pedro were live with the community watching it unfold. Hi, my name is Janet and this is Trade Travel Chill. If you're new here, welcome. If you're returning, welcome back. Be sure to hit the like and subscribe button so you can be notified every time I upload a new video. In this breakdown, we're going to map out every one of those moves step by step so you can see exactly how to read them when the higher time frame muddies the water, but the lower time frame is telling the truth. Let's get into it. Let's start with Monday because this is where the entire week really set itself up. What we got was a double-sided stop hunt, part of the false move week beginning. Here's what happened. Asia opened with a stop hunt to the downside, clearing out these long positions, whilst at the same time this would have induced traders to take short positions or triggered sell stops that were placed below the weekend trap. So mission accomplished. Longs taken out, shorts induced. Then Asia immediately reversed price to the upside, wiping out these weekend shorts whilst luring in fresh longs at the top. When we go back to the weekend trap, we can see that we have typical consolidation, low volume compared to when the market is open, and open interest is decreasing whilst we are in this consolidation. This means we are likely to see a stop hunt before the major move is done. On top of this, what we can clearly see is Asia has run a trend, which is not typical session behaviour for Asia. Once the damage was done, we see UK automatically reverse that move, followed by the US session going into consolidation. So from here, it's basically a reset. Price could go in any direction. And with the session behavior shift, it makes it tricky. So if you're new to trading the model, this is a day where ideally you would just sit out until something clearer presents. I know this is going to sound easier to say in hindsight, but if you are new to the TTC channel, you may have noticed that we use the market sessions indicator, which is at the top of my screen here, where it says Asia, UK, and US. Each session has their own typical behavior. So what we would expect out of the Asia session is sideways consolidation, ideally between a 1 to 2% range. What we expect from the UK session is for UK to run a trend. The US session, they can either decide to continue the trend that UK has set or completely reverse it. So when we look at the Asia session on Monday, you can see that they are running a trend, and although it is within our 2% range, it is the price movement that matters here. Ideally, within the Asia session, what you would want to see is sideways consolidation with multiple touches to the low and the high. What we have here is not that. That is running a trend. When this happens, we know that there is a session behavior shift, and one of the other two sessions will more than likely take Asia's job of that sideways consolidation. So we can see that UK hasn't done that. They have reversed price, but which is not normal for the US session, we can see that they have consolidated within that 1 to 2% range that we like to see. That there is the session behavior shift. If you want to learn more about this in detail, consider grabbing yourself a membership by using the link below, as there is course content that covers all of the intricacies of what we talk about here on this channel. While this was happening on the chart, the macro backdrop for the week was heating up, and you could feel the market bracing for Wednesday's Fed decision. SilverWolf actually flagged this in his blog. He called it the hottest week for crypto with Fed rates and inflation front and center. The base case on Wall Street is a 25 basis point cut, the first cut of 2025. Markets see this at the start of an easing cycle. Here's why that's unusual. Normally the Fed cuts when the economy is weak and stocks are well off their highs. Not this time. Stocks keep breaking records. The S&P hit fresh highs last week, while inflation is still running at about 3.1% core CPI, well above the Fed's 2% target. Cutting into that heat is what makes this cycle different. And jobs, labour signals are softening, fewer people saying jobs are plentiful, more saying they're hard to get. That cooling gives the Fed cover to start cuts even with inflation still warm. History shows that when the Fed cuts with stocks within about 2% of all-time highs, the S&P has been higher a year later in 20 out of 20 cases, with an average gain of near 14%. But the next 30 days after those cuts are a coin flip. we often get a pullback before the longer push higher. Why does that matter for us in crypto? Well, the 12-month view favors risk assets like crypto, but the next few weeks can be messy. Pedro actually covered this on Monday too. In this video, he lays out why he doesn't think the top is in yet. He broke down BTC, ETH, XRP, and even pointed out key support levels for CRV. He also did technical analysis on SOL and CAS, then went through the dominances. So you're seeing community voices line up on this macro theme. So by the end of Monday, we had a clear peak formation low on the chart and a macro bombshell ticking for Wednesday. Asia had already shown us the session behaviour shift, UK had reversed, and US consolidation. And the Fed decision was hanging over the market. All of that set the stage for Tuesday's first leg of the 3-day swing. Here's how it played out. With US giving volume on Monday through the 50 EMA, we see Asia continue to push price higher, completing our rise level 1 for the 15-minute time frame. There's nothing unusual going on with the Asia session, so we should expect typical behaviour. We see UK run a trend, which then provided the retrace higher low before our rise level 2 into the US session. Like I explained earlier, Asia consolidation, UK run a trend, and then when it comes to US, they can either decide to reverse that trend or continue it. At the start of the US session, we see the US session open manipulation before they reversed UK's trend. That then gave us our rise level 2 here on the 15-minute time frame. How does all of this help you, and why does it even matter? Because once you can identify the peak formation low, the volume through the 50 EMA, and then clear session behavior, it makes it easy to try and get the entries to then trade in line with the market makers rather than against them. Even if you're not in a position yet, you can at least anticipate what the market is going to do and whether that is worth the risk to reward. It's about letting the market show its hand first. So while the chart was giving us that clean level progression, the macro narrative was getting louder. Pedro actually did an urgent update on Tuesday called the FOMC opportunity 99% will miss. He was flagging a big misinterpretation around FOMC. People on X were saying the Fed decision would automatically dump the market. Pedro broke down the data and explained why that's not a certainty in his view. There's only about a 50% chance FOMC dumps price. He even said he expects the correction after FOMC because the market may need a reset, but he's not calling a guaranteed dump right on the time of FOMC. Then he walked through how he'd trade BTC, Ethereum, and XRP if we did get that correction post FOMC. That's exactly the kind of nuance that's missing from a lot of the social media noise. So by Tuesday's close, we had two things lined up. The chart was clearly stepping up through levels, and the macro conversation was heating up with a lot of confusion around FOMC. By Wednesday, the market had already given us rise level 1 and 2, and now we were staring straight at the FOMC decision, the macro event everyone was talking about. Wednesday's Asia session opened with a fairly typical session at first, but then we saw what I believe was a Brinks trade setup into the London session, right before the big news. Again, consider grabbing yourself a membership if you want to learn the Brinks trade in detail, but I can give you a brief overview of what it is. When it comes to the Brinks trade, you want to be at a key level, high of the day, high of the week, low of the week, low of the day. If we map out where the previous high of the day was, we can see that this is the highest point from the previous day, so that would have been our high of the day. From here, what will happen is, around the Asia extension, you'll see Asia extend the range with 3 clear pushes to the upside. This is where you can drop down to the 5-minute time frame to identify those 3 small pushes. So now that we are on the 5-minute time frame, you can clearly see the 3 pushes to the upside. This then gives us the initial high of the day out of the Asia session. From here, you're looking for an inverted hammer or a bearish railroad track in this case at 3:30 a.m. New York that closes at 3:45 a.m. New York. You also want to find the inverted hammer or bearish railroad track within 30 to 90 minutes of the Asia extension where you identify those 3 pushes to the upside. Once you identify that, it gives you the Brinks setup. Now this trade is like finding a unicorn. This is the closest to a Brinks trade we have seen since the beginning of TTC. So the entry is the bearish candlestick pattern identified at the right time with a stop loss above the Asia extension high. It is called a Brinks trade because it is so certain to play out, and it means you are getting paid today. This setup is profitable across all pairs, BTC, altcoins, everything. It is also known as the game over trade. It is the most reliable and also with the smallest stop loss out of all of the setup within the market maker method. This setup only happens between Asia UK changeover and UK US changeover, and it has to be found at the right time. Because this setup is so guaranteed to play out, if you do not move into profit within the first 2 hours, then it's not the Brinks trade and the market maker has another plan. But in this case, you can see that price pulled away really fast. Your initial profit target is the next closest EMA or unrecovered vector candle. So just from the entry, the target has been met to the 50 EMA, lining up with this green vector candle. So now that the initial target has been met, you would just manage this trade if you decided to let your runners run by moving stop loss to break even, watching how price reacts at the next target, and maybe securing the rest of it at the bottom of this blue unrecovered vector candle and calling it a day so you're out before FOMC. That trade, massive risk to reward. And this is why no matter what session you trade, you always want to be here at the session changeover, because this is the best time to find your entries and the only time you're going to find a Brinks setup. So from there, rise level 3 was complete. We see the Brinks trade reverse price into the US session around FOMC. During the actual FOMC news event, Annii and Pedro went live with the community on YouTube for a laid-back FOMC watch party. It was mostly banter, but it gave everyone a chance to see the volatility together in real time. Annii even said beforehand she expected FOMC to be a nothing burger, and that's exactly what we got. This was a great example of our community in action. Instead of panicking or chasing headlines, we were sitting in a live environment, watching the reaction develop and thinking about the next move, not just the first spike. That's important because major events like FOMC often produce knee-jerk moves that fade. By knowing the levels ahead of time, like that 4-hour vector and the liquidity sweep, you can plan your entries and exits instead of reacting. And while everyone was focused on the Fed, SilverWolf dropped a blog about something completely different but hugely important for the next cycle: crypto treasury companies. These are firms that are basically half business, half crypto wallet. They're putting billions of dollars worth of coins like Bitcoin, Ethereum, or even Dogecoin on their balance sheet and then running their companies around that stash. Think of it as Wall Street wrappers for crypto. Why would a company do this? Well, stock price boost. If the stock trades above the value of the coin it holds, the company can issue new shares. Use the money to buy more crypto and make each share backed by even more crypto. Investor hype. Being the Bitcoin company or the Dogecoin company is a marketing hook. Accounting rules. New rules let firms mark crypto at market value, making the model cleaner for CFOs. SharpLink Gaming has positioned itself as an Ethereum treasury company. It holds billions in ETH and has a 1.5 billion buyback program starting with 15 million repurchases. Forward Industries says it will become a Solana treasury company. CleanCore is stacking Dogecoin and already holds hundreds of millions of Doge. It sounds exciting, but there are risks. This model works when the stock trades at or above the value of its crypto and when the coin it holds has strong demand. It breaks when the stock trades below its crypto value for too long. When the company's debt builds up, or when the coin is super volatile and has no yield, like Doge risk. So Wednesday gave us a unicorn Brinks setup into FOMC, a live look at the volatility with Annii and Pedro, and a reminder from SilverWolf that a whole new class of crypto treasury companies is emerging as we head into the last quarter of the year. All of this framed the backdrop for Thursday 3 hits up and eventually a multi-session information, which we'll break down next. Thursday was pure price action. No big data releases, no FOMC headlines, just the market showing its hand. And what we saw was a textbook pattern unfold post FOMC. Across the US session into Thursday's Asia session, we got 3 distinct hits to the upside. Asia actually ran another trend and put in the initial high of the day, which again is not typical behavior and means in either UK or US session we may see consolidation, which we then got during the UK session. Around the start of the US session we see the typical manipulation at session open, but failed to break the initial high of the day set by Asia. This then gave us a multi-session M formation, which then reversed our 3-day trend to the upside. Now, whilst Thursday looks boring and the M formation looks obvious now, there were a lot of other key factors pointing to this area being the area to watch for a major reversal. So let's look at those. On the 4-hour time frame, we had come back into this unrecovered vector candle. We know that when it comes to these major high volume vector candles, we pay attention to the bottom, the middle, and the top of it. And where that lower time frame M formation formed was actually rejecting around 50% of the vector candle that I have marked out here. You can also see when we come to high block and look at the liquidity that move up on Thursday was starting to clear out more high levels of liquidity above price, with the next major level being around the 120k region. So zooming back into the 15-minute time frame, that multi-session M found in a high volume vector candle on the higher time frame where a lot of people would be looking to take profit, equaling selling pressure. This is the early change in trend. What we need to see now is the rest of the model follow suit. This is why we stress patience after major news events. Big moves can look like a breakout, continuation, but if volume fade or you get increasing volume that fails to break a key level and you get multiple rejections, it's often distribution, not fresh demand. Recognizing that saved a lot of traders from chasing the top here. This was something that I pointed out on my Thursday US session call when price was here. There was always the chance we headed higher and we had to be prepared for that. However, I said not to trade it or only trade it as a scalp, as the retracement that follows may take out your entry. Your initial target is the initial high of the day. Overall, my ideal play is for price to come back down to 113.3 before the next 4-hour rise level, explained in more detail on the call. So that is that chart here, and we can see my first target is the initial high of the day, and this is basically where we have to reassess what is going to happen. For short, if you are not the aggressive trader, then you're better off to wait for a conservative entry to present. So let's talk about that. Heading into Friday, we get typical price action out of the Asia session. The key things to note here though, we have the M formation, and this level here is the center peak of that M formation. What we want to see in drop level 1 is price breaking the 50 EMA with volume. This also provided a break below the center peak of the M formation, giving us a change in market structure. What follows that is proof of the move. So heading into Friday, this M is really starting to shape up. We see the initial high of the day set in the dead gap zone, with Asia repeating that level at the Asia Open, confirming that the initial high of the day may be set. You can never be 100% confident of the initial high and low being in until the Asia session has completely finished. However, there are key things that you could look for that help you identify whether they may be in early or not. If you want to learn more about that, again, it's in the course content. Consider clicking the link below to learn it all in detail. Come the UK session, this is when we look for our typical Friday UK behaviour. At the start of the UK session, what you'll see is a false move. From the false move, UK tends to run a trend. Near the end of session, they pull back against the moves. What this move did was provide a retest of another key level of ours, which is 50% Asia. If you're a TTC member, then you'll have access to our exclusive indicators that show you these levels. However, if you are not, what you do is simply draw a fib from the highest point formed in Asia to the lowest point formed in the Asia session and mark out the 50% level. That gives you 50% Asia. So now that we have that, you can clearly see UK's false move to the upside that provided the retest of 50% Asia and the 50 EMA, giving you an entry to then catch this move to the downside. And this is exactly the setup I shared with the community before that move happened, in anticipation that we would see downside, explaining to them the typical behaviour of the UK session and what I was looking for. I was looking for the false move to the upside to give you a lower high rejection of 50% Asia. Ideal target for that trade was the 800 EMA or the low of the day. So when we come back to the chart, this point here was the low of the day, and you can see our targets have now been hit, giving our community a nice 3-to-1 trade before price then went into a typical weekend trap. So Friday closed out the week with a confirmed drop level 1 and a clean low of the day target hit and a weekend trap setting up. We also had Annie's live stream reinforcing the need to protect profit and watch those high volume vectors heading into options expiry. All of that sets the tone for the weekend and the next week's setup. After Friday completed the trend to the downside, we see the US session pull back against the move that put us into that weekend trap. This is when we have to zoom out to the higher time frame. That weekend trap ended up playing part in the 1 hour model, essentially giving us a boardroom before levels. This is where your lower time frame entries can feed into the bigger structure. In TTC, we call this the Linda trade. I actually put out a setup for Sol over the weekend. That's unusual. We're normally off the clock and enjoying time with family. But based on incoming news event and the behaviour of Asia, I anticipated that Asia wasn't going to behave as usual come Sunday 5 PM market open. It was a nice example of spotting an opportunity when conditions line up, but not expecting that every weekend. So here you can see I gave my Sol analysis on all time frames, working my way through the daily time frame, the 4-hour time frame, the 1 hour and the 15-minute. On the daily time frame, I had 3 rise levels in. For the 4-hour time frame, 3 rise levels with a final damage M formation. Moving on to the 1 hour time frame, I had identified my 3 rise levels plus this extension move. I was looking at this to be a V-top as part of the final damage M formation on the 4 hour time frame, and this here to be a drop level 1. On the 15-minute time frame is where we start to hunt the entry for pinpoint accuracy. So why I was looking for an opportunity even though it was the weekend was in anticipation of Asia's news event. I mentioned I'd be open to looking for a false move week beginning setup early to take us to at least the liquidity just below price and potentially 217. Look for bearish rejection of the EMAs. If you don't get a rejection in the area of interest that I had marked out, then no trade. So let's look at that 15-minute chart. This is my area of interest that I had marked out, and you can see price pulled back perfectly into that area of interest and gave us bearish candlestick pattern. The first target was back to the low of the week where there was liquidity. The final target that I had in mind was 217, which you can also see hit, giving our traders a nice 9-to-1 risk to reward, taking advantage of the major market move that happened on Monday during the Asia session. I kept the community updated with how I was managing the trade and then mentioned to them that my target had been hit, closing my trade out. So as the weekend wrapped up, we were left with a higher time frame boardroom pattern, the classic trap after a big week, and even that rare Sol setup I shared. But the real highlight isn't just the chart patterns, it's how our community responded. While all of this was unfolding, traders inside TTC were spotting opportunities, sharing setup, and executing with discipline. So let's take a moment to highlight some of those wins and the lessons behind them. We have Crypto for Freedom locking in on the 90-day challenge, banking profits on a BTC long, Fartcoin, FLR, QNT, and Sol. We have Bat Air Bulldog. Guys, some of these names. Banking longs on Atom and Pingu, getting in and out before FOMC, smart move. We have Andre Giant with a trade on Ethereum. We have Artijourn with a nice trade on AVAC. We have Cryptones, who has just learnt about laddering in your entries, banking 168% on CRV. Another one taking advantage of Annie's setup on CRV. We have Handsome Rob again with 102% on Solana, 300x leverage. My friend, we need to chat. I'm just joking. And we have many people who took advantage of the Sol setup. And finally, we have nice setups here from Nat taking 2 long positions, banking profits on those, and banging the entry for the Asia session in anticipation of them running a trend. Nice one, Nat, nailed it. And just as a quick reminder, if you want to be trading these kind of moves in real time, whether it's BTC showing weakness or altcoins building strong narratives, you need a reliable platform. That's why we trade on WEEX. It's clean, fast, and designed for future traders like us. On top of that, by using our link, you'll get access to VIP 2 fee discounts, giving you one of the lowest fee structures in the market. So if you're not already trading on WEEX, the link is down below. Everything we've covered this week, from Monday's double-sided false move week beginning to Asia running a trend in the session behavior shift, is a reminder that the model repeats. When you start to map session behavior, peak formations, and how macro catalysts fit around them, you stop guessing and start recognizing structure. That's what lets you plan your entries, scale profits, and hold winners with confidence, even when the market feels chaotic. As you head into next week, keep your eye on the same tells we used this week. Asia's behavior on Monday, where the peak formation sets up, how volume behaves through the 50 EMA, and how high impact news can create inducement before the real move. These are the building blocks of consistency. Master them and every week becomes an opportunity instead of a surprise.